Welcome to the second video in our series on PARTF administration and an accounting workshop. Before we move into reimbursements, again, let me stress the importance of reading the manual in its entirety. Before you start your project, make sure you understand what PARTF will and will not cover. PARTF does not cover the cost of outside of the project period. There is a planning exception. Planning costs such as application preparation, appraisals, surveys, necessary permits, or design costs incurred within 2 years before the application submittal date are eligible. PARTF does not cover items not included in the project scope or in the applicant's list of project cost, state and local sales tax, the purchase of construction equipment and small tools, sports equipment, office or concession stand equipment, financing cost associated with the project, cost incurred by the sponsor due to breach of contract, cost overruns, donated or in-kind labor, costs not documented by an invoice or other conclusive proof of payment, legal fees. There is a land acquisition exception on page 11 of the manual. Environmental cleanup costs are also not covered. If you have a question about the eligibility of an expense, your RRS consultant should be able to clarify. The grantee is responsible for maintaining fiscal controls and accounting procedures that are based on generally accepted accounting standards and principles. The following minimum requirements must be met. Establish a separate account and supporting documents for the grant. Use the grant project number for coding all expenditures. Itemize all supporting records and documents of project expenditures by project element as listed in the applicant's project cost. Records and documents must have sufficient detail to show the exact nature of all expenditures and that they are directly related to a project element. Please reference the invoice description on pages 6 and 7 of the grant manual. Invoices should be made out to the local government, include name and address of the vendor, date of service or purchase, quantity of items purchased, description of items purchased or service rendered, unit price, and total amount for each line. Please note, estimates, quotes, or purchase orders will not be accepted in lieu of an invoice. Submit legible documentation in its entirety. Submit all pages of documentation, even if blank. Check your math. Make sure request is signed by an approved representative for the local government. Reimbursement requests can be submitted as often as quarterly with a minimum of $2,500 of expenditures incurred. Planning is capped at 20% or $200,000 of the project cost, whichever is less. Now, on to the bulk of this video. Let's walk through a reimbursement request. The Detailed Expenditure Report is often referred to as the DER. The first column is where you'll list individual scope items. And here in column C, these are your cost estimates. Both of these come directly from the cost estimates that were submitted with your application. And down here is a sample of project costs that you would have submitted with your application. Then you take your scope items, you list your individual invoice numbers, the date, the amount of the invoice, and column A are these added up for your total expenditures for this reporting period. Column B are total expenditures to date. And again, column C are the cost estimates that were supplied in your project costs with your application. The last column is the percentage complete. This is the actual physical degree that this scope element has been completed. It is not a ratio of expenditures to the cost element, but it's an actual expenditure, degree of completion of that particular element. Should you find that your expenditures have exceeded your cost estimates, you have a few options. You can submit cost revisions for approval, or we can cap the reimbursement to the original cost estimate as shown here. Another option is you can apply some of the overage towards contingency if contingency was built into your budget. Just a reminder, not more than 90% of PARTF grant amount will be reimbursed until the project is complete. Let's talk about AIAs, American Institute of Architects contract document. Note the rate of retainage is withheld as indicated on the first page of the AIA. Here, as in most cases, it is 5%. We'll come back to that shortly. I'm now going to show you 3 ways to document AIA pay application information on your DER. Here is a sample of a continuation sheet from a pay application. Here you see 2 lines have been highlighted, and it's noted here at the top. You can do it on the side wherever you have some space to list the specific scope item that those charges apply to. Then add them together, and then we have a total that will be applied to that particular scope item. Here's another page of the same pay application. And here they've highlighted one item noted at the top that it is to be applied to the gravel parking and driveway and the amount. Those will then be transferred to your DER. You'll list each scope item. You see we've noted the pay application, the date, and the total that was shown on the continuation page at the top. Now you'll see here, this is the first request. So columns A, the total expenditures for the reporting period, and column B, total expenditures to date, will be the same because no other expenditures have yet been applied to the project or any of these scope items, being this is your first request. Now this is the second method to show your expenditures with a AIA, and this is the most preferred way. You choose a specific color highlighter for each scope item. Here we've selected blue for site prep, green for playground, and yellow for trail. So you highlight the corresponding elements, add up those line items that show for this period, and then put your total here at the bottom. And again, this will be transferred to the DER as we had shown before. The third way is sometimes folks like to label their elements as shown here with B, C, D, and E. They might use 1, 2, 3, or 4. And then here on the DER, you'll see A, B, C, and D. They've labeled their scope items on the DER in the same manner. And then just like the previous examples, those totals would be transferred to this DER. Now let's go back to retainage that I had mentioned earlier. Here is an excerpt from the first page of the AIA that notes the percentage of the retainage. When you have retainage, you just have to do a little bit of math. And here we have expenditures for the playground as noted on the pay application. And we know, according to the first page of the AIA, that retainage is withheld at 5%. So you'll do a little math and withhold 5% of the expenditures for this period. So we'll deduct it here. And here in the example, there's another separate invoice included, and then all are totaled and carried over to column A. Now this does not apply on most of the time of final pay applications, because in most cases the final pay application will include all of the retainage that had been withheld throughout the entire project. And sales tax is something else we'll want to discuss briefly. This is an example of sales tax with a general invoice. These are pretty simple because most of the time you'll see all of your items itemized, a subtotal, your sales tax itemized, and then your gross total. Now, what you'll use is the subtotal figure on your DER and reimbursement request, because PARTF does not reimburse for sales tax. Now with AIAs, usually you'll receive a sales tax and use report, and your contractor should be able to tell you which scope item each item listed on that report applied to. Now in this case, it's fairly simple because the vendor name and the description is provided, made it pretty simple to figure out which scope element they would be applied to. That's not always the case, so you may have to ask your contractor. If you cannot tell exactly which element that that particular charge which was applied to, or sometimes you may have a single charge and tax noted with a purchase that apply to several different scope items. In that case, you can remove the tax from your totals on your reimbursement form rather than showing it individually with each scope item on your DER. Now here is an example on a continuation sheet where sales tax has been noted. This is very unusual, and usually you will only see it tax noted on that tax and use report. But every so often you might find it on your continuation sheet. Once you've determined the tax amount and which scope item it applies to, you're going to transfer it to your DER in the same manner that you did retainage. So you'll have your total expenditures, less retainage, less sales tax to give you your total expenditures for this reporting period. This is a gold star example received from one of our municipalities. Though not required, the finance officer also provided their checks as proof of payment for their development project. On each check stub, she provided incredible detail. The first column identified each scope item. The second column gave the amount billed. The third column withheld retainage. To then give the check amount. Following, she noted any sales tax applicable to each scope item. After removing that, she shows the amount subtotal submitted to PARTF for reimbursement. Then, of course, your totals for this billing period will be put on your reimbursement request form. Line B would be total expenditures to date. Again, this is the first request, so in that case, column A or line A and line B will always be the same. And then, of course, you're reimbursed at 50% of your expenditures for this period. Documents that must accompany your land acquisition reimbursement request are noted in the manual on pages 6 and 41 through 47. Appraisals must use the Uniform Standards of Professional Appraisal Practice method. If the land you acquire is valued at $500,000 or higher, 2 appraisals are required. Each property acquired with PARTF funds will be required to have a notice of restriction applied to the deed. The exact language your real estate attorney should use for this notice can be found on pages 12 and through 14 in the grant manual. Donated value is explained on page 7 in the manual. We will cover in more detail shortly. Not all transactions generate a closing disclosure or settlement disclosure statement, formerly known as a HUD statement. This is not required, but if you have a closing disclosure statement from your transaction, please submit it with your reimbursement request. It clearly breaks down costs associated with the transaction. Every reimbursement request should include a reimbursement request form and the detailed expenditure report. If you have donated value, do not include this figure on your DER. Only actual expenses incurred go on the detailed expenditure report. If you have a combination project, complete the acquisition reimbursement request prior to submitting reimbursement requests for development, unless you submit them together. We must ensure site control before we can consider development cost. Now, let's look at some of the documents I have just referenced. The closing disclosure statement clearly shows all expenses incurred with the land transaction. You see the contract sales price, your settlement charges, which are further outlined and detailed and broken out on page 2 of a closing disclosure statement, your county taxes, and then you'll see here earnest money was paid. That was money paid prior to closing towards the purchase price of the property. Figures from the disclosure statement are transferred to the DER. Again, here you will see the earnest money that was paid prior to closing, $10,000 that you had seen on the closing disclosure statement in the prior slide. The amount collected at closing was $390,710, and those added together totaled the purchase price that was also shown on the disclosure statement. You'll notice the $2,394.25 in taxes that were highlighted in blue in the previous slide are not included on the DER. This is because PARTF does not cover taxes. Donated value is present when property is donated or acquired at a bargain sale. Donated value is determined by the difference in the property value and the amount paid for the property. Should you have donated value, reimbursement is determined differently than the standard 50-50 ratio. If you have donated value, this is the form you will use. This is a new form and can be found in the newly revised grant manual released in 2020. To determine your donated value, you will note on the form the appraised value. This obviously comes from your appraisal, less your purchase price, and the difference then is your amount of donated value. You'll see here the expenditures for this reporting period are noted. Here, the form gives some detail on how to figure the actual amount for reimbursement, since donated value is handled differently. So I've itemized it here. For example, you have your total expenditures for the reporting period, which is on line A, less the donated value, which is $199,290. So that leaves $222,672.60 of additional expenses. The donated value is reimbursed at 100%. The additional expenses are reimbursed at the usual 50%. So 50% of that figure gives you $111,336.30. You add that to your donated value to come up with the amount requested for this reimbursement, which in this case totals $310,626.30. If your initial reimbursement request does not include enough incurred expenses or expenditures to match or exceed the donated value, it will look like this. Your total expenditures are noted here. And again, for example, I've added this box to the right. Line A are your total expenditures for this reporting period, less your donated value, which is actually more than your expenses. So the amount to be reimbursed will be 100% of line A, and you will still have some remaining donated value. In this case, $77,327.40. Now this will be carried forward and applied on the next reimbursement request once you have more expenses that have been incurred. This is a little repetitious but worth mentioning. Please maintain these items in your project file. In order to close your project, closing documentation must be received within 30 days of the project end date. Please reference this list on page 8 in the grant manual. Once your project is considered closed, your obligation is not over. Post-completion inspections will be conducted at least every 5 years. You must operate PARTF-assisted facilities to provide public recreation for 25 years. PARTF-assisted land acquisitions must be used in perpetuity for only public recreation purposes. Any modifications will need Department of Natural and Cultural Resources approval. Should you anticipate modifications, please reference pages 19 and 21 in the grant manual and contact your RRS consultant for guidance. We hope this video series has been helpful, and we wish you great success with your project.